Good morning, everybody. Welcome back to the Schwab YouTube coaching channel for our next edition of Trader Talk in today's market. I'm your host, Kevin Horner, joining you from a beautiful and sunny Denver, Colorado. Thanks for being here today, everybody. The market continues to be a little bit back and forth, a little bit of volatility for us. Had some headlines here on an overnight basis and an early morning basis today, leading to some movement. And we're going to talk about all of that with all of you. So thanks for being here this morning. I'm joined by my friend and fellow coach Barb Armstrong there in the chat. Pardon me, joined by Brett Crowther in the chat. Say hey to Brett this morning, everybody. He'll get to questions and comments. I'm unable to, but we do want to hear from you as always. I'll try to keep an eye on what's going on in the chat there and bring those appropriate questions into the discussion where I can. I enjoy doing that. So please feel free posting for the duration of our show. We're going to go about 45 minutes in total. Now, if you're not already doing so, you can follow us both on X, Brett Crowther CS, Kevin Horner CS, the best place to find us when we are not hosting classes for you here. My posts have been a little bit delayed, or rather, not nearly as active this last couple of weeks. I've been traveling quite a bit, but I intend to get right back to those charts. So be sure to be following and on the lookout for some updates here. All right, so beyond that, let's get to disclosures and we can move into the chart. So first of all, remember that everything we discuss for you here today should be considered informational and educational only. Remember, we do not make recommendations here. We do not endorse any specific approach to trading the market. We do, however, bring technical analysis to the conversation here each and every morning. As we do that, we remind you that what we're offering up, though, is just concepts and strategies traders might choose to employ on their own. What's important from our standpoint is that we use technical analysis simply as one of our decision-making pieces, meaning simply don't base decisions exclusively off what we get in the way of technicals. We want to have a multitude of factors that we're incorporating, and we want to utilize those pieces to make our decisions, but not just one single thing. Now, if you are new to our discussion here in the mornings, we take a top-down approach to reviewing the market. So we're going to hit the major indices first. We're going to look at the S&P 500, the Russell 2000, the NASDAQ 100, and then we're going to expand a little bit. Need to look at semis today, so we'll hit the semiconductor chart. Had a big move yesterday in the transport, so we're going to look at that and the relative groups within the transportation index as well, and then move our way through sectors. And there are a number of very important stocks in the news this morning. So we're going to try to reserve the final 10 minutes to get a bunch of individual equities on the table. So with all of that table setting, so to speak, let's get to the chart. So we're going to lead with the S&P 500. And I know that our move to the upside here has been maybe a little bit more than many of you were anticipating. The key development here could very well be the fact that we have maintained our gap level since having moved through it. So we had a multitude of gaps here, right? We always know the importance of our gaps. So we use gaps as a reminder of the shift in market sentiment commonly tied to news headlines that we get. So we had a very significant gap when the ceasefire was initially announced back here. That gap wasn't just held, that gap was a gap and go trade. As you can see, we had got no remote give back on that, and it's been straight up. Now, if I take that line and duplicate it, I can now add another layer, and that's basically the low we hit on, let's see, today is Thursday, so that would have been our Tuesday low. So what happened here? Well, we filled that gap for a successful test. And, I mentioned this yesterday when we were chatting with Brent. You could have been forgiven if you simply looked at this candle and said, well, that is the end of this rally. I'll go ahead and show some defensive posturing to my positioning. A lot of traders might have looked at that and said, well, we filled that gap. Let's reduce position size here. But I want to remind you, if you're taking a very disciplined approach to your trade process, this candle, as ugly as it may have been, wasn't so much a breakdown candle as it was a current, to this point, successful test. So I have to remind ourselves, we have to remind ourselves that we're looking for our confirmatory pieces that validate us taking action. And while we had this gap move, it didn't officially break down. It simply filled the gap. So the high from this gap move prior to the gap was 7,051, and then the low on that gap move came in at 7,050. So we would call that a successful test of support. And I'll remind ourselves once more, when we are traders, our goal is not to sell at support, it is to hold at support. Remember our expectation. If it is in fact support, then we should see a bounce subsequently. That's exactly what has played out here. And so, even though it was a relatively news driven bounce, it's notable, right? So pay attention to our gap levels. And if I threw up one other piece, let's just put a 10-day moving average on that. Yeah, there's another piece of confluence of another piece of data at the same price level that we can use as validation. So remember to define your process. For some of you traders, it's going to be a close under the 10-day for the first time in 3 weeks. That's going to be the impetus to take some profits or move some cash to the sidelines, right? For some of you, it was the candle on Tuesday where we traded below the low of our high day move. Could have been validating, and yet the trend has maintained. So the takeaway, I believe, right now at least, is that while we have made a fantastic pop to the upside, we have not given it back. Even over the course of the last 4 sessions, as things have settled, what we've ultimately done is built out a bit of a bull flag. And that needs to be viewed optimistically, regardless of our narrative, regardless of our concern. If you are struggling to maintain bullishness up here, well, then the process needs to be discipline once more, right? If you're uncomfortable, maintain the cash position with which you would have comfort, and then look to deploy if we do in fact continue higher. Of course, if your comfort is not such that you can deploy new funds to a trade that's at highs, I can understand it. Watching the market will give you some of that comfort, hopefully, but you got to get to a point of if you are in fact trading the trend, reminders are that the trend at new highs are not considered to be bearish in nature, right? So just some of these key concepts to bear in mind as you're watching the market here. And remember that if we are uncomfortable with the movement in the market, that our best way to mitigate that uncomfortable nature is to try and stay long or owning our positions, but reducing the size of those positions along the way. And if you are sitting on more cash as the market continues to move higher, you're not going to be as happy with your returns in all likelihood, but you will be more comfortable. And if we can utilize that comfort as the market continues to give you reasons to be investing on the long side, holding your positions longer, etc., well, then hopefully what that'll give you is the confidence to then start deploying money. And what we ultimately need is that confidence, right? We need to have the confidence to put that money in, to manage our risk appropriately. But for a lot of traders, what's going on in the short term is all the narrative risk, right? All the discussion around the terrible aspects that we do know about, right? Everything that makes this market difficult to be continuing to put money to work, those headlines are just that. That is noise. Headline risk, noisy day-to-day movements, not necessarily trend killing. If it were trend killing, everybody, we would have seen some action here, and we are just not doing it. Look at the NDX right now. Yesterday, again, new high in the NDX, broke out of a bull flag. We might have another level to base movement and decisions on once more, right? So kick it up another level, right to the last low. Yesterday's low could be an area for short-term traders to move on or kick out some of these trades. Remember, management of your trade along the way is probably the number one thing that you individually can do to give yourself that comfort to stay in this market. And that's, again, I recognize how difficult it is when when you have all of that noise, but ratcheting your exit strategies higher, incorporating exit strategies at all, planning your trade and trading your plan. This is what we traders need to do if we're going to continually manage things. So NASDAQ 100, a very similar chart to what we see in the SPX, and possibly busting to new highs today. Obviously, we know the level there. So right up above us, the all-time highs. We'll try and get through that. And here we are still in overbought territory as it relates to the RSI. Reminder that RSI overbought conditions are validating the trend, everyone. They are not telling you that the group has to come lower, right? Overbought does not mean must sell. It just confirms the trend. Okay. So, good levels here to monitor. The breakout spot, the level that we know can provide us with support. Prior highs often act as support on any throwback we get. So if you are expecting a throwback maneuver, well, then this ledge here, 25,850 or so, could be that spot. It would mean that you'd break the 10-day moving average, right? But I bring it up because there's a couple of levels that you could make decisions on along the way. So if on the way lower you feel like you need to tighten up your exit strategies, I've been long and running this whole while. Now if I break the low we made yesterday, well, I'll sell a little bit. Maybe it's 10%, maybe it's 25%. You unload some there. Then you have another layer for exit below that. Maybe that's at the 10-day moving average. And then maybe you're looking at redeploying anything you take off in the vicinity of those last lows. Pardon me, those last highs, potential former resistance, now potential support. So that's kind of what we're looking at on the NASDAQ. And you can, of course, apply these same thoughts to the S&P based on the consistency of the move we've gotten here. Big moves, all three major indices reflecting a lot of the same action. Now, there is one group that's not quite participating the same. We're going to look at it momentarily. Here, we're looking at the small caps. I'm going to put up all my moving averages once more. Again, Russell, big gap maneuvers. We know those levels of import here. We had the big Taco Tuesday move right in here, right? And then we had another one just right here with the advent of this week, or moving out of last week into this week. Another gap zone for continuation opportunity. And once more, what are we seeing? An improving trend. Our short-term moving averages crossing our intermediate to the upside. So here we've got the 20-day crossing the 50 into the potential former resistance, now possible support. So we're going to eyeball that for possible support on any potential breakdown. But again, don't be misled that a breakdown has to occur. We eventually expect it, but there's going to be some clues along the way. And that first one here, the gap level becomes an important spot for the Russell 2000. So we'll keep an eye on that right around 2,740 or so. So, Melissa, this is a good question here as it relates to what we're covering. We're talking trend and certainly broader indices here, right? The S&P 500, the NASDAQ 100, the Russell 2000. But I bring the concepts to the table because I find that if I share these ideas as it relates to technical analysis and the way that you might be incorporating it with your individual equity trades, these concepts still provide insights to us traders, as even if we're trading those individual positions within these indices. The key components are more general in nature, like the gaps carry a lot of weight for us, right? They give us quite a bit of insight and aid us in managing our downside risk tolerance. So we know that if we slip through the low we made on this gap day, for example, well, then we have risk to fall to the top of that gap or to the former resistance potential support zone. And I think the reminder that I want to offer you viewers and traders is that those concepts carry, whether we're talking indices or individual equities or anything else for that matter. Technical analysis can be applied to indices, equities, and over multiple periods of time. So all of these concepts, all of these thoughts carry no matter what we're talking about. Okay, so that's ultimately what I'm trying to say here, Melissa. I hope that's a helpful answer to your inquiry there. Okay, let us look at our leadership today. How about our semiconductors cruising higher? 2% day. likely getting a little bit of a boost from one of the semiconductor stocks that reported overnight, that being Texas Instruments here. I'm going to call something out on the semis here briefly, and that is what I was just talking about with regard to the RSI. Last year, I had an oval on the RSI moving into overbought conditions. Yet, look at what that overbought condition has done. It's only extended. Here we've got the RSI nearly at 83, very aggressively high, but we often say it, overbought can stay overbought much longer than you expect. Don't fight the trend. This will break. It will come back. But the reminder once more is if you are a trader, if you're leaning in to technical analysis, then be disciplined to said technical analysis. Don't allow your emotions to overweigh what you see on the chart. This is an excellent point, Mr. Brown, or Mr. Brett K. Brown, excuse me. Charts are unbiased. That's right. The chart is giving you everything that is known. Facts, rumors, conjecture, all of it. All of those details are built into price. So we accept that as the fact and we take that and we work with it. We have got semis at new highs. So how do we manage semiconductors? Well, here you've got such a consistent move to the upside. A 10-day moving average is probably not sufficient. If you're simply buying long semis, you're looking at a bit of a give up. I mean, where we are right now to the 10-day moving average, I'm just going to cheat and draw a line to it. There we go. There's the 10-day. What does that say? About 6.25, it's almost 6.5% from where we are to the 10-day moving average. It's a lot for many traders to give up. The 10-day is too slow for you. Maybe we make it a 5-day. So I just dropped this from 10 to 5, and let's see if the 5-day is a management technique. Well, it could be. I mean, look at this. We have been above it since basically the entire month of April. You've held the 5-day moving average on a close. What does that mean? Well, as an example only, if you've been holding the semis and you break on a closing basis the 5-day moving average, that could be a sell signal, not for all, but for some of a position, right? If you're 100% in this trade and you break the 5-day and you want to see what happens, maybe you sell 25% of it, sit on 75%, and let things balance out and settle. The opportunity could be sideways. Remember, consolidations don't occur exclusively in the way of price movement. Often we get sideways and we don't move price. We just pass through time without really moving price, and that gives us support. And that support can then bring in even more traders. Okay, so has it been a significant move? It sure has. Utilize whatever level of comfort you have to maintain the trend here. But the truth is, as even in overbought condition, this trend is strong. You continue to have good earnings details from a number of key companies in this space, and it's going to continue to carry. At some point, that'll change, but you don't need to run for the exits necessarily unless things do, in fact, change. So wait for signs of evidence is one way that a lot of traders are going to manage this. One last note. It's perfectly okay, by the way, if your plan is to be the individual who sells into strength. So when we talk about, the trend and the opportunity for the trend to shift and whatnot, a lot of traders like the idea of taking small, insignificant sized portions of their trade off as the group moves higher. And I know that's not a comfort for all traders, but if you're the trader who looks at your portfolio and says, well, I'm up X or this many dollars, this much percentage, I don't want to see that give back. So I'm just going to sell a little, and then I will feel good about having taken some off at this elevated level. As it retreats, I will be right to have sold a little bit. I will also be right to have held a little bit. This management process is something that you individually need to define for yourself, define whether or not you like the idea of selling into risk, or rather into strength, or if you prefer to sell on weakness. Know what that is for you so that you can make your decisions effectively and speedily. Speedy is key to this process, right? A lot of the time we are not prepared to make the decision because we've not really thought it through or planned it out. But if you have thought it through and planned it out, man, does that give you comfort to make that decision in the moment, I believe. So a key thought process there. Okay, we're going to move off of semis. We're going to talk about the transports. Transports had a very rough day yesterday. Look at the size of that candle, everybody. We had a fully bearish engulfer at the end of a massive move to the upside, everyone. So we've moved, if we go back to the end of March, just take our low, we went up aggressively, 37% to the upside, and now we are in pullback mode. I'll remind you, pullback mode does not necessarily mean a broken uptrend. Sure, are we giving back a significant amount? We are. Is the amount consistent with what we would expect? Well, let's do a little 50% move on it. And boy, we're right at it, aren't we? So possibly we could hold up here at the 50% level. So I could put a line at the 50% retracement. Some of you like this idea. A lot of traders might consider that. And then I'm going to duplicate that trend line and I'm going to put it down at the 61.8. So this becomes a possible range for us to find a bounce in the transports. You'll notice that right below that range is my 20-day moving average. So if you're new to the class, you might not be familiar as much with the work of the Fibonacci sequencing, but that does give us some insight as to where we might find support on a pullback. So the 50% level is my first line. We're sitting on it right now. The 61.8% retracement, the second line, and that's going to be pretty close to the 20-day moving average if we see transports get down there. This zone becomes an area where we may expect a bounce, right? So we'll see how that flies. Good question once again, K Brown. I like to cheat as usual, but here's one thought process. You can go into the visualize our heat map. Now I'm looking here exclusively in the industrials of the S&P 500 and then ground, specifically ground transportation. Now that's not all of the transports, as you can see, but that's ground specific. If we go into let's see here, let's do. So we could go outside of the S&P and go into, for example, the all watch lists or all stocks, and then you could drill in further. That's available. Okay, but one easy way might be, I think one of the easier ways, and I'm just gonna just going to give you some thoughts on it. It would be to grab a transportation ETF, for example, and find the stocks that are the leaders in that group. And what I mean is the top holdings. That might be one thought for consideration. Another thought is that you can always take stocks that you know to be in that space and then look at them against one another. Look at the peers, for example, can be a good way. But ultimately, what we're talking about with the transports are the three pillars, as I like to call them. That being road and rail, okay, airlines, and truckers. So, trucks, road, rail, and air. So I use these indices here. Let me get them in here. I'll show you what I'm talking about because we like to see these components. So here's the airlines. DW $ DWC AIR will give us that. If let's see, try that one more time for us here. All right. Thanks for your patience, everybody. It looks like my fingers are ahead of my Thinkorswim platform here this morning. So let's try this. Okay. So looking at these three components obviously gives us a little bit better clarity on where the losses accumulated yesterday. And it was, in fact, airlines. If I can get my platform to respond to me appropriately, we're going to be just fine. Here we go. Let's try it one more time. So there we are. Okay. So airlines got beaten back pretty aggressively over the last week. Of course, highlighted by movement in oil specifically. And that's not a shock for us, right? But you can see by my resistance line up here, we rallied into it. And when I talk about preparing and paying attention to some levels of resistance, everybody. This is kind of what I'm referencing. Look, we had that line in there knowing we might get there. And then the very next day, we were below it. We had a close below the low of the high day, this being our high day, this being the low of the high day, and this day being our close below it. And we've actually sold down a little further. In fact, if we just looked at just from that sell, from that close, we pulled back another 6%. Didn't save you everything. It often won't, of course. But if you were basing your decision making on things like close below the low of the high day is a good day to sell some, and close above the low of the high day, a good day to add some back, as they often suggest in managing our trends. Well, that's something you might see there with the airline industry. So watch that 20-day, watch today's low. A slip through the low we made yesterday could bring us back to the bottom of that pattern here, right down below. Okay, so that's what we're seeing with air. And then also the rail stocks did take a little bit of a beating, but they've held up better. And you'll notice today we're getting a rally here. This is likely tied to, I believe it was UNP that we heard from. Let's take a quick peek. Yeah, so Union Pacific giving some leadership here on its move. Okay, so it's not everything moving to the downside here, but here's the trucker look. DWC TRK, better, again, holding up better than one would expect. I'll tell you, I think the discrepancy here is in the price of diesel fuel. And I got to be honest, I'm shocked that this continues to move to the upside the way that it does. But apparently, the overhanging pressures are far more important as it relates to jet fuel than it does to diesel here, apparently. And I say apparently because price continues to the upside, and let's not fight against trend. So this is a lovely development if you're watching the truckers. And then I'm going to draw another line in here, everybody. Look at, we often say we got to look to the left to confirm what we see, right? And this is exactly what you had here. This is a big move, big V-shaped bounce, and we have just kept moving. If we want to use a Fibonacci level to maybe tie in an exit strategy based on this bounce, we could go from this here to the low we made, and let's look at the extension level. And then it's up there at 28,440. That becomes a possible target. By no means is a target like this any guarantee to be achieved. But if you're a trader, we're often looking for ways to set levels and know where we would be willing to move on. This breakout, could it lead to a move to this ledge? Yeah, it sure could. Doesn't mean it has to. But the first thing we got to do is we got to continue higher. We got to make a new high here. So watch the short-term trend, 20-day catching up with the breakout level. Another possible level here as we've gone higher over the last 5 days, similar in scope. So, the interesting thing as it relates to the transports, I've got my Dow theory chart here. Let's bring that up. Let's see. There it is. So we've been watching this. The transports made this significant move, as we see here on the weekly chart, right? With the reversal we had just yesterday. And it was a big reversal, by the way. About 11% from the high to the close yesterday. But look at the industrials here on the left. Bounced aggressively after getting thrown back to the breakout spot. This is another excellent example of technical analysis 101 concepts getting shown in the wild. A breakthrough resistance led to a significant pop to the upside in the industrials. In fact, it went from basically about a year. So this was, about 9 months or so. So this breakout occurred over 9 months from the former resistance to about a 12%, 11.5%, 12% move. And then when the sell hit, it sold down right to the same spot for the retest. Exactly, Kelly. We should not be surprised by that. Now look at what it did over on the transport side, everybody. Same thing, right? Breakout, throw back, and test. And then once the test hit, we have a successful bounce once more. Okay? So these are, again, common in the market. This happens frequently. But if you are not prepared for it, well, then the red candles in the midst of the sell-off are going to make it really difficult to be a comfortable buyer in there, isn't it? So if you know that that's the case, hey, be prepared, right? That's the reminder here. If you are familiar with these concepts and you put faith in these concepts, well, that's what's going to give you reasons to participate, opportunities to participate. And I think that's the hardest thing for us traders. You know, you've read it in a book, you've seen it in a on a number of key posts, but maybe you haven't been putting your money at risk in the midst of these moves. And if you haven't been, well, then it's much more difficult to look at these and say, well, that's going to be an area for a support test. You know, seeing these play out in the wild should give you the confidence to try and trade with them in the future. And you know, we know that these don't work every time, whether it's a breakout and a retest or any other strategy approach that a technical trader utilizes. Nothing works 100% of the time, which is why trade management is so paramount to our process. Okay, let's get look here. I'm going to jump back to my Market Watch tab. We're going to take a quick visual on the S&P 500 here. Let's see. There we go. All right, there we go. So leadership in a little defensive by nature today, right? We're getting that a bounce in energy, industrials are moving, and we've got staples moving. So it is a little defensive. You can see that evidenced by the colors on our heat map, of course. And we know that lower right corner of the heat map is where a lot of those defensives lay out, right? You got your utilities, materials, real estate, and energy, staples down here. We see software with a bit of a struggle this morning, tied probably to some weakness out of ServiceNow following their earnings. So, yeah, a little defensive in nature here today from a posture standpoint. And if we look at our recent moves, what we've had has been a significant shift to leadership over the last month with technology, communications, and discretionary in the upper levels up here. Real estate got a bounce in the last month too. And that's having a really good move on a year-to-date basis. Let's look at real estate. I haven't checked in on real estate recently, but hey, this is notable. So I think here, maybe what we're seeing is, again, a bit of a reminder of the importance of the rate situation. If the expectation is for rates to be coming lower, well, then you would expect to see real estate providing some moves to the upside, some leadership, and the same can be said for utilities. Utilities getting a little bit of a move here today, up about 2%. You know, I think the hardest thing to do is probably consider trading utilities because your trends don't seemingly trend the way they do with regards to these shorter term moving averages. As you can see, these longer term 200-day certainly a bit more consistent for something like utilities, but the intradays and the shorter term stuff become a little bit more difficult as it relates to utilities specifically. Yeah, we can do that for you, Rita. Let's look at software first. Let's look at technology. So tech has been a pretty good leader here for the last month, as we saw. We're getting a bit of a pullback today here, even though the semis are rallying. Let's take a look at tech here. Wow, what a okay. So another awesome concept for reminding us about trend analysis is the broken down trend here. And in this case, everybody, the broken down trend was your best chance to gain access to this one. If you were waiting for some confirmation, you got it pretty quickly. You know, we had a breakout and then a test on the same 50-day moving average coincident with the downtrend line. And from there, it has just been a slingshot higher. So 12.75% to yesterday's peak. We've got a bearish Harami today. All that means simply is that today's action is fully engulfed within yesterday's action. So you can see that we've got a little bit of a doji at the moment here on tech. But let's see how software is looking. I'm going to use my index here, the software DWC SOF. And yeah, software is improving, but once more, big snap to the upside, and now we're coming back into a zone of hopeful support. Now, a couple of concepts here that we could employ. We moved through our resistance, so resistance became possible support, so that line did not hold. So, what about reconsidering what could be another trend situation playing out? Well, we can draw a trend line from this peak through here. Okay, so we've got this broken, and we've got some moving averages beneath us that we could consider, right? We got the 50-day below us, the 50 and the 20 are on top of each other. And in this instance, a lot of traders will just utilize the lower one since they're relatively close to each other. And some traders might incorporate, some type of average true range calculation. That's a possibility. Good call out there, Gerald. Yeah, double bottom. If you want to call it, we got a short-term double bottom, really quick, right? That was over 2 weeks. But the other thing is a series of lower highs in price that was also getting higher lows in RSI. So we do have a bullish divergence in the RSI. It has led to a pop to the upside, but it has not only gone higher, excuse me, and I need to remind us of that. Now, one final thought. What about a Fibonacci move suggesting that this could be a new uptrend working out? Can we give back about half of the upside move we've made and still have some upside opportunity? So what a trader might like to see is that as I draw this here momentarily, that the 50% or the 61.8%, but probably more likely the 50, which just seems to be an area that we often see these rallies come back to test. Let's see if we can get some kind of confluence at the 50% level. Maybe it'll line up at the 50-day moving average. So let's just draw this in. And let's see. Boy, that could not be too much better, could it? Right to the 50% retracement is pretty close to the 50-day moving average right here. So, you know what? That does give confluence, right? It does strengthen that price level potentially for us. It doesn't mean that it has to bounce there, but if it did bounce there, we traders wouldn't be surprised by it, and we'd be capable of putting ourselves in a proper risk versus reward opportunity there, right? That would make some sense for a lot of traders. So I think that's worth keeping a close eye on as well. Okay, let's see here. All right, so that's software. Let us, taking a quick look here. You know what? Let us go back and let's get to some of these stocks that are in the news. I mentioned a few of them here this morning. We do have a tight window that remains for us, but we need to get to some of these that are moving around. So in the news today, we had ServiceNow, and they are getting beaten up again. So let's bring this back to how about a 6-month chart here? There we go. So, we've been watching ServiceNow for a while. That 50-day moving average has been resistance along the way. Even though you have earnings coming with this morning, not every trader was looking at this for bullish opportunity as we had rallied into the 50-day. The trend has been very consistent. Rallies into the 50-day have been sold. Heck, rallies into the 20-day have been sold. But the consistency of this cannot be, can't be ignored really. New lows in price followed by lower highs in price. These are difficult to get out of, right? So this one, as you can see, I've got all those lines drawn in. I mean, what are we looking at here? At this point, is there any reason to say you couldn't get down to that last level? It's entirely possible that we do, right? That stands out for so many of us. I mean, and even there, does that have to hold up? Not necessarily, unfortunately. So let me just point out some of the detail here. Looking for my headline on that. All right. And we're going to look at some that are actually, where's my, it looks like I've lost my headline, everybody. I thought I had it and I lost it. So I'm going to come back over here to live news. So we've got a price target adjustment here. out of Citigroup, dropping it from 177 down to 154. Interestingly enough, 154 represents about, my goodness, about an 80% upside from here. It would be the 200-day moving average, I'll point out, pretty close to it. But again, no target is a guarantee to be achieved. Analysts across the board seemingly cutting now here following their announcement on earnings. So seeing that from a number of key companies. So just keep an eye on that. The headline risk here pretty substantial. We had a good report on Texas Instruments and had some adjustments there, and that was leading on the semiconductor side. So let's take a look here. 16%. A possible gap and go situation here, everybody, with a big move to the upside here with this gap. Baird analysts raising the target on Texas Instruments to 300 from 225. JP Morgan updating it to 280 from 227, maintaining overweight, as did Baird. These are not upgrades, everybody. These are just up price targets on this. So, and it was a number of them. So JP Morgan raised, KeyBank raised, Goldman Sachs raised their target 200 from 175. Jefferies raised to 260 from 210. Jefferies maintaining a hold rating while everybody else is looking relatively strong. Although I must point out, Goldman, even though they upped the price target here, everybody, to 200 from 175, they maintain a sell rating on Texas Instruments. So heads up to that. And then we also had a number of very big moves, upgrades, that is, once more, I should say, not upgrades, but elevated price targets on one that reported yesterday, that being GE Vernova, GEV. GEV's move continuing here today up about 2%. And they were getting some adjustments from Guggenheim, raised the target to 1,300 from 910. That's a nice increase. And Baird raising from 1,000 to 1,400. Barclays analysts raising to 1,250 from 993. Raising and maintaining overweight. So overweight ratings, outperform ratings, buy ratings on GEV, and elevating their price targets. Keeping an eye on this one, of course, is that gap zone that I've drawn in. Big gap maneuver. This was a $100+ gap, everybody. So keep an eye on that. The top of the gap, where the first line is there around 1,070, a pretty important level. But if you start to fill the gap, there's commonly a trader will expect it to come down to the bottom of the gap or the top of the former resistance there, and that's going to be about a 70-point slip from the low. So just a heads up, that would not be insignificant by any means. And then there's been significant move with the car trade. Yesterday we noted the movement in Avis, and it looks like the unwind has officially begun. We had a significant sell yesterday, and we talked about it right at the peak, more or less, yesterday, everyone. A very significant move. Again, we did not encourage traders to jump into this one by any stretch. We were preaching risk here. This is substantial risk, obviously. A short squeeze can unwind quickly. It's exactly what you've seen here. Unfortunately, when I look at the peak at 847.70, that means that there was a buyer at 847.70 satisfying somebody else's sale, and here we trade at 321. These instances cannot be ignored. These are the reminder of the risk of a volatile market. And yeah, this thing went up, an outright assault to the upside, running the 5-day moving average for 17, 18, 19 sessions, and yeah, pulling back here aggressively. I would agree that it looks like the short squeeze is over, and this is coming back to normalcy now. And now the question is just how normal are we talking? What level did it breach that it could very well come back to? Well, I'm going to put this on the weekly chart. We'll just take a little look. Oops, I'm suddenly on. Yep, not the hourly. Let's go back to the week. So, yeah, boy, maybe the last ledge we got from was 210, 212, something like that. If you want to find in the neighborhood of 240, perhaps, I guess. But, again, this is just not uncommon with these moves, unfortunately. These short squeezes like this. This one lasted perhaps a little bit longer than some traders would have expected, but nonetheless, the break was what was the most significant, obviously, and then the give back exponentially fast, as you can see, right? Look at these, just huge, huge moves. Even if you use the pink line, you would have saved yourself a pretty substantial amount. Look at that. We're talking about a 58% move to the downside there just over the last few hours. So my goodness, rough, rough stuff. So hopefully we save some traders from even considering this. You know, the options market made it really difficult for anyone to step in here. This has just been, these moves just difficult to say the least. Okay, we're going to have to wrap it there, everybody, as we are at time, but I want to remind you that the channel here is live for the remainder of the day, as you all know. So keep it tuned right here for more from us. Remember to follow us on X, Kevin Horner, CS, Barb Armstrong, CS, and we always appreciate any opportunity you all provide in the way of follows on X. And if you like the discussion, you can always hit that thumbs up below. We're going to review this one and get it into the archive here shortly thereafter. So thanks for being here this morning, everybody. Hope you have a fantastic rest of your Thursday. I look forward to catching up with you all again real soon.